The Malaysian Ringgit is extremely strong again. I think this year we are the best performing currency in Asia, or at the very least, Southeast Asia. We are making constantly new highs against other currencies, and against, for example, the rupiah, we are actually at all-time highs. But what does this actually mean for us? I think one thing that a lot of people immediately think of is that yes, holidays will be cheaper for us, which is perfect for me actually because I'm going to Japan really soon. But surely that is not the only thing. So in today's video, I'll be sharing how the strong ringgit actually impacts us and our personal finances. Let's get to it. So first, what is causing all of this? This time, we really can't say that, the Malaysian ringgit only looks strong just because the US dollar is weak. Because right now, like I was mentioning, the Malaysian ringgit is making new highs with many other currencies. And in fact, the US dollar is actually pretty alright. One thing though is definitely the interest rates. So a lot of countries all over the world are still cutting their interest rates. Their central banks are cutting interest rates many times this year. Whereas in Malaysia, we've only had one interest rate cut to 2.75%. I won't explain this in so much detail, but basically, the higher your interest rate, the stronger your currency technically should be. Another factor that could cause the Malaysian ringgit to be strong right now is that we actually might have some pretty strong fundamentals and our economy is actually pretty good. I know a lot of people don't feel this way about Malaysia, but that seems to just be the truth, right? Our economic growth, GDP growth is still pretty decent compared to other countries, and domestic consumption is also pretty high. But as always, when it comes to currency, whether it goes up or down, it really depends on many different factors, both internal and external. So that's why I really think that, no one can really take credit for stronger ringgit, just like how no one can really take the blame when the ringgit is getting weak. So how does this impact us as Malaysians? The first one is of course something that everyone already knows. Whenever we buy foreign products, whenever we import things, it will be cheaper for us Malaysians. Unfortunately, brands that are already in Malaysia, foreign brands that have stores in Malaysia, they won't be so quick to adjust their prices, right? Now that the Malaysian ringgit is stronger than their country's currency, they will just take it as, additional profits for them. So they won't adjust their prices so quickly. But we have seen, for example, I'm pretty sure Uniqlo had a store-wide price reduction in Malaysia sometime last year when the Malaysian ringgit was constantly making new highs against the Japanese yen. But if you're buying things directly from other countries and the price of those items are quoted in their currency, then you will immediately feel the impact. For example, I have this software that I use for trading. It is priced in US dollars. So when I buy that subscription, immediately I will feel the benefit. It is a lot cheaper for me right now. Then there's also our cheaper holidays that I was mentioning about. If you guys are planning to go to Indonesia, the rupiah is actually extremely weak. I think 1 million rupiah right now is only 250 ringgit. I remember back in the days it used to be like 300 ringgit. And I am going to Japan, like I said. So this is perfect timing because the Japanese yen is another currency that is extremely weak right now. Just 1 month ago, I think sometime in October, 100 yen was 28 ringgit and 50 cents. Right now, 100 yen is just around 26 ringgit and 70 cents. So that is a pretty significant strengthening in our currency. So because of all of this, inflation pressure in Malaysia could also ease off a bit just because whenever we buy things from overseas, it won't be as expensive anymore. If you guys want to see a more direct example, let's say there are local companies that we buy products from. They source the raw products from other countries, right? And now, when they buy their raw materials, when they buy their supplies, it will be cheaper for them, so they won't be under so much pressure to increase the prices that they sell their products for. So when everything becomes a bit cheaper for us due to the stronger currency, inflation will not go up by as much. On the other hand, there will be a loser because companies in Malaysia who export a lot of products, who rely on selling their products to other countries, they will struggle because when the Malaysian ringgit is stronger, now the pricing becomes a bit less competitive for them. I like to give an example in terms of palm oil, so let's do that. Let's say 1 ton of palm oil right now in Malaysia is being sold for 4,000 ringgit. So 4,000 ringgit and an exchange rate of, let's say, 4 ringgit 30 cents per USD. Back then, 1 ton would be 930 US dollars. Right now, 1 US dollar is under 4 ringgit and 15 cents, meaning 1 ton is now $964. So you can see, we're selling it for the exact same price, which is 4,000 ringgit, but to American buyers, they now have to pay more US dollars to get the exact same amount of palm oil. So maybe they'll start looking at other currencies, right? Or maybe other countries, So maybe they'll think, maybe I should just buy it from Indonesia because their palm oil is cheaper just because the currency is weaker. So yeah, companies who rely on exports a lot, they will suffer. That is just an example, right? Palm oil, but I think the clear industries in Malaysia that will suffer from this are probably our glove makers like Top Glove, Supermax, and also tech manufacturers. I think these guys will see a bit of a challenge trying to sustain their demand, just because now everything will be a bit more expensive for their overseas customers. Speaking of stocks and our investments, there will also be an impact, of course. So the first thing is, any and all of our investments that are denominated in foreign currencies will see a drop in value. If, let's say, you have 100,000 ringgit invested into the US stock market at the start of this year, as of today, you would be down by over 7% or over 7,000 ringgit just from the Malaysian ringgit strengthening or the US dollar weakening. So yeah, that is actually quite painful. On the brighter side, a stronger currency could give more confidence to foreign investors to invest more money into our local stock market, which is Bursa. And another thing when it comes to investments is that if you hold any money market funds or bonds that are denominated in US dollars, then yeah, you will be experiencing quite a lot of pain. I've said this before, but if you invest into US dollar money market funds, yes, the yields are nice. You're going to get like 4% plus, compared to if you put it into a Malaysian Ringgit money market fund, you will get 3% plus. But the thing is, here is the risk, and it's playing out right now. When the Malaysian Ringgit strengthens against the US dollar, then you will be losing a lot in terms of Malaysian Ringgit. So let's say you're getting a yield of 4% plus. Like I said, the Ringgit has strengthened by 7% plus against the US dollar, which means this year you would actually be losing money. And this is why I do not invest into US dollar money market funds. For as long as I live in Malaysia, for as long as I spend in Malaysian Ringgit, I will try to keep as much Malaysian Ringgit as possible, with the exception of stocks, because I think stocks can outperform any losses from currency swings. One benefit when it comes to our investments in foreign stocks and ETFs is that if you guys want to invest more money right now, then yes, your Malaysian Ringgit will buy more US dollars, which means you can buy more stocks with the same amount of Ringgit. So that is good. If you guys are holding a lot of cash, you want to invest into US ETFs, then now could be a good time currency-wise, but it does look like the stock market is also going down, so let's see. So let's summarize the winners and losers real quick. I would say, travelers and consumers, which is basically nearly every single Malaysian, will benefit from our stronger currency. And then businesses who rely a lot on imports, they buy stuff from other countries to create their own products, they will also benefit because now the raw materials will be cheaper. On the other hand, export-heavy industries I was talking about, glove makers, they will suffer for now. If you are a Malaysian who is currently working overseas, earning in a foreign currency, and you plan on coming back to Malaysia one day, then yeah, you will suffer a bit as well, because your purchasing power in Malaysia right now won't be as great. I actually know quite a few people who, they live and work in Malaysia, but they work for a foreign company. So they get paid in US dollars or whatever it is. Yes, if you're one of those people, then of course you will immediately feel that your same amount of US dollars will now convert to less Malaysian Ringgit. And then finally, like I mentioned, for those of you guys who are like me, who like to invest a lot of money into the US stock market, then yes, it is a bit painful right now because, the value of our portfolio is not going up as much as it should. US stock markets are going up like crazy, but because the ringgit is now stronger, when we look at our portfolio in ringgit terms, we will see that the value is not going up by as much. But like I said, there's also good news to this. If you want to buy now, the US dollar is cheaper. This is also why I like to dollar cost average, because we're not just averaging the price of the stock or the ETF, we're also averaging the exchange rate of Malaysian Ringgit against US dollars. So, having said all of this, what can you do as a normal Malaysian to take advantage of our stronger Ringgit? So if you've been planning a holiday, if you're thinking, maybe I've been working so hard, it's the end of the year, maybe I want to go on holiday early next year, then now is the time for you guys to start planning for it. You can start booking hotels. They will be, I think, immediately cheaper. Flights, maybe not. And you can also start converting some of the currencies into your Y. So this is something that I've been doing over the last few months. I've been converting Malaysian Ringgit to Japanese Yen because actually this entire year, the Malaysian Ringgit has been strengthening against the Yen. But because I started converting a few months ago, right now the Yen is even weaker. But who knew this was going to happen, right? And if you guys, like I said, if you guys want to buy things that are in foreign currencies, let's say you like to buy things from Amazon, or if you have, different subscriptions that you like to sign up for, then now's also a pretty good time because, obviously the ringgit is stronger. And then for your investments, it's also a good time for you guys to review. If you have any US dollar denominated money market funds, then maybe you want to think about it. Think about, long term, do you still want to hold this, seeing, the impact of a currency swing? Maybe you don't want to cash out everything now while the US dollar is weak or while the ringgit is strong, but the next time the Malaysian ringgit pulls back, you can think of, cashing that out and moving it to maybe Malaysian ringgit money market funds. If you have foreign stocks and ETFs, then yeah, start thinking about what you want to do as well. Yes, the currency swing is painful for us right now, but personally speaking, I wouldn't really panic because I do want to invest into US stocks long term. But yeah, you can always take these opportunities to sort of review your overall portfolio. And then finally, if you guys are invested into local stocks, then like I mentioned, there will be some clear winners and clear losers when it comes to impact of currency swings to their P&L. So if you hold any of these companies from any of these sectors, then maybe you want to start again, just having a look at their performance over the next few quarters and see how big of an impact this currency swing will have on them. But overall, I would say don't panic, don't overreact and make any knee-jerk reactions, because currencies, they tend to move in cycles. It's not like the S&P 500 is going to just go up forever. It tends to move in cycles. I think exactly or nearly exactly 1 year ago, October 2024, the Malaysian Ringgit versus US dollar also went to 4.1 just to retrace all the way back to 4.5. And then right now, we are again back to around the 4.1 level. But if you do see any opportunities, then you can take advantage of it. I think this will differ by person and your current personal finance situation. For example, in my trading account right now, we hold many different currencies. And in terms of US dollar, I was actually negative by quite a big amount. So because the dollar is weaker against the ringgit now, I took this opportunity. I converted a bunch of Malaysian ringgit to US dollar to flatten that balance. And yeah, it's actually pretty nice, 10% savings for me. So let me know what you guys think about this recent move in the Malaysian ringgit. Do you think that this time it could be a bit more sustainable and we could actually go below 4 ringgit versus US dollar? Or do you think this is another short-term thing that will retrace in the next few months? Thanks for watching this video to the end, guys. Give me a huge thumbs up if you enjoyed it and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.